Okay, let's talk a little bit about auditing and monitoring accounting systems. And when we do this, one of the first things we want to do is, well, just consider the word audit. If you think about the etymology of audit, if you're a kind of a word buff or a language buff, we go all the way back to Latin. Audit is the root word for a number of different things that we come across. Our auditory system in our body, auditoriums. So if you think about it in that regard, you think, well, we're talking about the sense of hearing. And in a similar sense, the word audit relates to hearing, but in a legal sense, not in a physical sense. So audit is essentially a quasi-legal process that we as auditors conduct, certainly as external auditors, conduct to review management's assertions. So all audits review management's assertions. And in the case of an external audit, you can think of it as a court hearing where we as the auditors act as the investigators, we plead the case, we argue the case, we also issue the ultimate findings, if you will. And that's a good concept to keep in the back of your mind as you go forth and start working in, as many of you will, an audit career. Okay, so with auditing, we do have the typical external auditing, which is probably what most of us going through an accounting program think of. And the external audit, the responsibility we carry in the external audit is to those outside the organization we're auditing. So in this case, we're acting as a steward of the public interest. So we are responsible to shareholders. We are responsible to creditors. We are responsible to the general public in which these businesses operate. And that external audit can only be conducted by accountants working for an independent CPA firm. And as a matter of fact, this is the only monopoly that CPAs have. We are the only ones that can conduct public company audits here in the U.S. For listed companies. Everything else we do, we compete against. Tax returns, we compete against all kinds of different small and large tax preparers, law firms, and you name it. Consulting services, we also compete against independent contractors all the way up to large management and strategic consulting firms. So the purpose of the external audit is to perform the attest function, and basically we are looking at management's assertions regarding their financial position and everything else that's in the 10K as to its accuracy, its fairness, and certainly with the financial statements relative to GAAP and the additional disclosures. So the idea is that in all material respects, financial statements fairly represent the organization's current position and, whatever period in time, generally a year of activity that is covered in the audit. And that brings up the concept of materiality, which, even though we typically operationalize it using some kind of a financial figure or percentage in the audit, basically what it means is a difference in information that would cause someone reasonably relying on this information to make a different decision than they would have otherwise. All right. So with the external audit, the SEC is basically the organization that put those into place and mandates that. Sarbanes-Oxley added some additional requirements. The FASB and PCAOB operate under the auspices of the SEC, so the SEC manages their activities. So far, they have been able to operate fairly independently. So, of course, anytime you see the administration and the SEC change, it might be worth noting to see what the approach will be going forward. So they help manage PCAOB oversees CPA firms and their activities, and of course the AICPA with its role in the certification process and licensing for us as CPAs. Now, on the other hand, internal auditing, the responsibility for the internal audit is the company itself. So company's management is responsible for the internal audit. The internal audit should be done. The internal audit function should be external from any department being audited. That used to be considered best practice, but many companies for a long time still had internal audit functions that reported up through the CFO organization. It could report to the controller, could report to directly to the CFO. It's now required to be a separate, complete entity within the organization that reports directly to the board. And we'll get into that detail a little bit more in just a minute. So the purpose here, generally for an internal audit, is to make sure that the company is complying with management's policies and procedures. You can also use the internal audit to help develop and evaluate the internal control structure. This is generally a key component of that management's control evaluation that goes into the 10K. Internal audits, much like the independence notion we have for external audits, should also be conducted with an independent frame of mind. The idea is that we want the audit to be conducted objectively. And internal audits have a lot wider latitude in what they can do. They can perform financial audits, almost exactly like the external audit firm will. And companies may do that from time to time just to make sure that they're covering their bases or possibly finding things that they can improve on to help streamline the financial audit, reduce the cost of the external audit when it comes around. Operational audits, just checking to make sure things are done properly. Compliance audits to make sure they're complying with all the laws, rules, regulations for all the various industries, countries, other jurisdictions that they're operating in. Internal audits can be used to investigate for fraud. When management suspects fraud, or if they've actually found some fraud and need to figure out what happened. IT audits for the IT operations. In this case, we have a number of other certifications that we've talked about earlier. CISA being the Information Systems Auditing certification that is highly regarded. Certified Internal Auditor. And we've got an internal audit organization, the Institute of Internal Auditors, also that helps to set best practices, code of ethics, and all the types of things that you would expect for external auditors or CPAs from the AICPA. So if we lay them out side by side, you can see from an external auditing versus internal auditing standpoint, the external audit, we have the independent auditor as defined by the AICPA. Of course, they are paid directly by the company, so there's a fiduciary relationship there, but the auditors need to approach the auditor from as objective a standpoint as they can. Same thing with internal audits. The auditor should try and perform the internal audit imposing as much objectivity or independence as they can. External audits required by SEC for publicly traded companies. All internal audits are completely optional. So why would a management perform an internal audit if it's optional? And this is a case where you're looking for value. They are anticipating or they expect that they can get some value out of internal audit functions. External audits are what we typically refer to as the financial statement audit. Internal audits can cover all kinds of different services. External audits represent the interests of outsiders. Internal audits represent the interest of the organization. And of course, we've got standards, guidance, certification guidelines on both sides. One last thing about internal audits. Internal audits can be performed by CPA firms as well. And a lot of companies that don't have their own or don't have a large internal auditing function will hire CPA firms to come in and perform internal audit functions for them. So CPA firms do provide internal audit services to clients as well as external audit services. Now, the caveat there is obviously a CPA firm cannot provide internal auditing services for a company that they're the external auditor for.